Hey everybody, great to be back with you. It's been a little bit. My name is Mike Fairborn, and great to have you here for our swing trading class. We're going to take a look and really introduce a swing trading strategy that we're going to talk about each and every week. And I hope all of you, since this is my first time back in a couple weeks, like many of our coaches, of course, but just wanted to welcome you all back. Hope you had a fantastic holiday season and great Christmas. On that note, everybody, looking forward to this discussion each and every week. We're going to look specifically at swing trading over a set time frame, generally like 3 to 7 to 10 days, right in that range. Maybe not anything more than a 10-day period of time, but oftentimes up to seven. But generally around 3 days. And so this is a class that can be quite interesting for the shorter term moves, but also even if you're a longer term trader, a longer term player out there, think about this class also as a way to maybe develop some ideas about possible entry points that you might have anyways for a longer term trading strategy, like just an entry or something along those lines. And so I'll look forward to diving into that with you, but I would like to welcome you all here today. We've got AP, we've got High Speed, Chena, Randy, David, Ted Scott, we've got Jay Richardson, and others. It is a new class, AP, and I'm excited for this each and every week, where we're going to take a look at both stocks and options too. In this class, we go bullish and bearish, so we're going to have a lot of really good flexibility there as we look at particular trades out there where the strength might be in the market as it kind of varies back and forth between bullish and bearishness. So welcome to you, Speak. We've got Will, Ocean, Lena, Kenneth, Joe. Good to have you all here, as well as hey Tish. If you are new for the first time joining us I would say you're probably new for this class. You're all new for this class, but I do recognize many of your names. But welcome to you as well. It's always great to have our vets that come back each and every week. But looking forward to it very much. So with that, everybody, you could join me on X. My handle is simply just Mike Fairborn CS. You could join my colleague here, right, Cameron May, and his handle is Cameron May CS as well. So let's dive into some disclosures to get the show on the road here. All right, first off, information here is for general information purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Now, as it states here, options do carry a high level of risk. They're not suitable for all investors. Spread trading must be done in a margin account. That's another thing we can certainly do in this class as well, is spread trading. A lot of it's going to be directional, but we could have some neutral strategies as well to look at. It does state that multiple leg option strategies will involve multiple transaction costs. Schwab does not recommend the use of technical analysis as a sole means of investment research. We might from time to time just take a look and see how companies have been doing on earnings, and so it kind of ties into that a little bit. The paper money software application is for education purposes only. A stop order in general, will not guarantee an execution at or near the activation price. Instead, once activated, they do compete with other incoming market orders. Now, with the stop limit order, you may risk missing the market altogether. In a fast-moving market, it might be possible to execute an order at the stop limit price or better. Past performance is no guarantee of future results. Okay, so now as we dive into our class today for the first time, I did want to let everybody know that we do have a set of slides that we can reference from time to time as we discuss this class, because many of our discussions are going to be around when we talk about swing trading, of course, right? We're going to be looking at a flag type pattern, but it doesn't always necessarily have to be a flag, but in a lot of cases you can say, it's going to be part of a flag. There can be other aspects too. It could be a different sort of a pattern, but generally, taking a look at the bull side, we're looking at the trend in our favor and then an isolation of a particular range. And this is where I think these slides can be really, really helpful, because when we talk about the swing trade, we do want to identify the key focus of the time frame that we're looking at, and really just not just the time frame, but the actual move itself, what that might look like. And as you can see right there, that's the focus. Okay, so we've got this here as a potential run up. Now, would this fit within a 3, and I'm going to extend this out just because our chart shows it a little bit longer out in time, 3 to approximately 10 days. I think 3 to 7 could be very interesting too. Taking it into, if you're looking at days, and what I'm really focusing in here is not calendar days, but actual market days where we're actually seeing bars, right? 3 to 10 days out there, or 3 to 7 days. Now, with that, you can see over here, we've got a pullback, follow through with the underlying trend. You can see pretty clearly here. In fact, just to highlight this, because it's going to be a key to our discussion each and every week too, that is a higher low. It's a higher low. It is a higher low before what we're getting here on these nice slides that were created before we even had this class. But this is a breakout, and that right there represents a trend line coming off the top of that upward move. And it's really kind of a channel, right? But that also could be a 3 to 10 day move. What we've got here: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So it looks like we got about 11 bars over here on the upside as a follow through, but that is in fact a flag type pattern. There's going to be some others I'm going to show you today as we look at them, as we really focus in on strength. But we're going to reference these from time to time. This is our first class within this new class, and so I did want to still go through these bullet points just so you have a general idea of what to expect, and I can refer people back to these that haven't seen this before, because we'll plan on just getting this archived as a reference point here. But we'll say this: the trend is bullish. The time frame, short term, days to weeks. Now, if we are saying 10 days, we know that that could be like a couple of weeks. 5 and 5 calendar days on each. Construction, strong initial move known as a flag pull, sideways, short-term parallel support and resistance. So that's all shown here on our image, an entry, a break of resistance. I've got some potential additional rules to take a look at that I think can be very, very helpful, specifically in today's market. That might be more than just, let's say, a break above resistance, or let's say a K hold. You might be familiar with that, a close above the high to low day. We've got some further areas to investigate there to try to help boost some probabilities, perhaps, that traders might use. We've also got potential target that is equal to the length of the pull added to resistance. Okay, and by the way, I'm going to stop on this right here. I don't know, you guys, many of you do use Fibonacci's. I mean, I do. I use Fibonacci levels within what I look at, and in many cases, you know, there is this level up here. It's the 61.8, which is a Fibonacci number. You know, we're looking at 100. That's the full distance of a move, and a lot of times that's what we're getting here. So you get the pull of the move, you get the follow through run, which is the flag pattern follow through, right over here, which should be approximate to this move, and a lot of times they can be at 100, but oftentimes too they go to about 61.8 and then they might back off a little bit. You might have a pretty extended pullback too, because we're talking about swing trading, and it's very important because the amount of sort of potential reward that we're looking at on the upside, the extension of the move, is limited. It is limited. We already talked about the number of days, and it's just that move right there. Sometimes if you're going to hit a 61.8 and you might see a little bit of resistance here and you get a pullback here, well, instead of maybe, you know, trying to exit there, or potential exit as prices have dipped a little bit, sometimes there can be a level like this that doesn't quite reach. I just wanted to add this because it might not be equal or 100% of the initial pull. And instead, it might be the 61.8, right? Okay, and you can see that sometimes when you get the longer pulls, it might only go 61.8, or roughly in that range. Okay, one more to look at before we go right into our topic of discussion as we go through this. But of course, we had to look at the bear flag side because we're going to be seeing this within this class too. There's always, I guess you could always say there's a bear market somewhere. Sectors have been going down. We'll take a look at that in just a moment here. But basically everything the same that I just mentioned. Okay, so I don't actually need to go through it, but you can just see that everything is just shifted to the downside here. And you're still just getting, first of all, a trend. And the trend is going to be key. Lower lows and lower highs, and basically, yeah, lower highs over here. That is your downward move. And by the way, just a real quick distinction, because I think this is something that is really, really helpful when you are becoming familiar with a bull flag, for example, and a bear flag. Because you know, and this was me too. I mean, early on, for sure. I mean, when I was looking at a price move coming up like this, I'd say, oh, cool. I've got a possible bull flag right there. It does have a pull, right? It does have the pull. It's got a pull back. Now, I'm only looking at a portion of the pullback. Let's just say this portion hasn't happened yet. But what's the distinguishing factor here then between a bull flag and a bear flag? It is, in fact, the underlying trend. we are making lower lows and lower highs. Now, if this were to reverse higher, let's just say, we'll clear this off, and we go something like this, okay, now we're actually talking about a bull flag because why? Well, the trend has changed. We've got higher highs, and we do have these higher lows over here too. Does that help? I think that just a big picture clarifier. Wanted to go through on that. All right. Hey, welcome, Dragon Rider. Josh and others have joined us. Susan, John, Greg, Josephina, as well as Richard. Great to have you all on board. Now, let's dive into our discussion here. We were just looking at a couple of slides that we're going to be able to reference in this class from time to time as we get into it. But for our first class for this topic, yeah, we wanted to hit that for sure. All right, next up, a lot of times when we're getting that bull flag pattern, let's look at the upside today. And one of the reasons why we could do that is because the market generally has been making higher highs and higher lows. Now, I wanted to kind of preface that by saying that down here, this is a similar low, yet we are coming off a higher high up top here. On a real short-term basis, you have to say this is kind of a lower high and a lower high, and there's the possibility of a, well, you could say, like, for example, let me take that double H off, but there could be a shoulder, head, shoulder here in the market. The point is, sorry, let's see, shoulder, head, shoulder, and like a head and shoulders pattern. Sometimes this is how reversals occur, and you might get another shoulder over here, a question mark. We'll put that down. We don't know if that will occur. We can still say that there is a long history of strength. This is a 1-year chart. Look over here with me. This is sitting right at some really interesting support. I know we've come down. Those ISM prices came in a little hot today on the ISM services, and the prices of those were the highest they've been since February of 2023. That's an indication of perhaps possible more concern or elevated concern, you could say, around inflation. And that's probably what's accounting for that move right there to the downside. At least when those numbers came out, that's exactly when it began to dip. And by the way, the jobs numbers look strong too. And the Fed just got through cutting, back in December, interest rates, which has only happened, like, I want to say 3 times in the history of the Fed that they actually cut interest rates in December. It doesn't happen too often, but it did. And that was the other bar we saw. So a little bit of movement in there, but quick, big picture. Are we going sideways in here? Yeah, we still are. And this is an upward trend. So I'm going to stick to a bullish theme, and we're seeing a lot of sectors that have actually been quite strong. Now, one of the things we're going to talk about in this class is building strength on top of strength, strongest stocks in the strongest sectors. That's important, right? Because, folks, we don't want to be choosing the weakest or the strongest stocks in the weakest sectors. Sometimes those have a very difficult time when other stocks in the same sector keep reporting bad news. A lot of times they just go up very, very lightly. It's a very tricky, sort of a dicey situation to play. Where it can be stronger is when the sector itself is going up. And so let's quickly go into the sector. I'll share this grid if you guys want it. If you don't have it yet, I'm going to go ahead and just detach it so we can just take a look, big picture as well. Just take a little bit of room off the top so we've got a full screen in here. This just lists all 11 sectors in the S&P 500, with the S&P 500 right down here in the bottom right-hand corner. But one of the key points I wanted to note as we look at this is, where is the strength? Where has the strength been? So a couple of quick ways to look at it. Yes, there is some strength over discretionary. That actually looks a little bit like a flag pattern, maybe coming down here towards support. But info or technology and communication services have clearly been kind of the stronger. In fact, those are a little bit hard to see. I'm just going to zoom in on it real quick so you can see it. But there's our maximize sell. A down day, no doubt about it. Maybe we'll see what happens. But still some strength. And we see some stocks in this group that are actually showing more strength. Let's go over here and take a look at communication services. Not as big as downward move here, and maybe a slightly higher low right off the bottom as we are making a higher high here. I'll tell you what, let's take a look at this first. I'm actually going to close this one out. I just detached it. I'm going to go right into the scan tab. And in the scan tab here is a great way to dissect and just have at your fingertips what companies have been moving over that time frame. Because if we look over here, one interesting thing we can say is, hey, well, what about this is a 6-month chart. So basically halfway through this level was about the last 3 months. What strength, you know, on an individual stock basis have we seen over here or here? What's broken out and gone higher? What's more responsible for lifting this group higher? Because the whole idea is to find that strength and look at those sorts of flag patterns, right? In the direction of the trend. So we're using the tools available to us right on the Thinkorswim platform. One of them is just simply, these sector charts. But the next one is taking a look at that 3-month time frame in the scan tab over here and just using some of our ThinkScript coding here to help us out. Now, quickly to scan in there, we are scanning in the S&P 500. We can click on that. We can go to the public folder. Boom, we got it right there. There's the 500. And then you can see I've got information technology. I'm going to switch it over to communication services, but to dip down here under industry and then pull it up right there. We've got a bunch of sub-industries in there. It won't matter. We can just see what's moving in the group. In fact, I have a sub-industry column, as you can see, listed behind the scenes there, kind of behind on our chart. So we could pull that up too. But let's just go ahead and select all communication services. And I'm going to run through this. And now we're going to see exactly what's been moving the strongest in that group in the S&P 500, because there are only 22 companies that show us that chart. And we're going to see it over here. Okay, and we'll be utilizing this going forward. I don't know if we're always going to go through this step-by-step approach. We can from time to time in this class, but first time I wanted to show you where I'm getting some of that information, where we can see where some of the strength is at. And then you'll notice we'll be choosing companies that are probably in the strongest sectors, the strongest stocks in the strongest sectors, maybe in the S&P 500, the NASDAQ 100, along those lines, okay? Can still look at the Dow too. But some of those more liquid type companies. Now, as we look over here, yeah, who would have thought that? I mean, did you know that Warner Brothers was the biggest leader in the group? Did have a big gap up and it ran, but now we're seeing some of the other names that you've really, you'd recognize. Netflix is in here. You got Disney, Alphabet right there. Meta is down here as well. These are all in that green area. Many of them are double-digit gains, basically from here on up. And so this can be really quite helpful. Okay, questions from Villager. Oh, looks like Cam's got that. Excellent, thank you. All right, well, let's do it this. I want to take a look at a few companies as we dive into this a little bit. And I want to talk about a little bit more about the potential trend and some of the elements of potential risk and potential reward that we might be looking at too. It's going to be very important as we set this up and establish sort of the swing trade strategy in general. But I'm going to pull up a few different companies initially to get going on this. In fact, just from our group. In fact, I'm just going to go over here. Let's pull up another one. This is okay. So, we can start off. I want to actually take a look at this company here in just a second. We're going to be looking at a few of these that you're going to be seeing the strength of the underlying kind of pull first, the pull of the flag, right? The strength of the flag. We can see that in. We'll start off here just with Google first, and I want to highlight a couple of details. All right, now this would have been interesting. This is going to be one of the elements we're going to run into within this class. Is it's on a Tuesday, it's in an afternoon, and we're going to have to hit things just perfectly to find what we're looking for. But I still want to put trades on, kind of explaining where we would have gotten in anyways, and or just kind of setting that up for a future trade as well. Okay, so first things first, looking at Google here, it was in that list of strongest stocks in the strongest sector. We have really two key strong sectors. We looked at communication services. So all we've done, folks, we've just inverted that pyramid, right? We've gone from the top on down looking for strength. We saw the market showing some strength. The NASDAQ 100 is showing strength. Then looked at the sectors. Now we're at the companies. Okay. So we're there. Now, do you see anything else here that might be of interest to you? Is there the possibility of a longer term pattern here that might stick out to you as you look at this? Now, realizing, we just looked at flag patterns, and that's a pretty strong upward move. A really nice gap right there too, gapping clearly above some prior highs. So that was resistance. And we gapped above it and we ran up. We also cleared some other highs over here. These highs were cleared. But as I remove this, what else do you see that could help to influence the possibility of this follow through move? Sideways, possibility of breaking higher. We know the sector has some strength, but any other patterns that you might be saying here? Let me just see. I just want to see. Type it in the chat because I'd love to see if you guys are picking up on some of this. Definitely strength. Yeah. Yes. There's strength there. There's no doubt about it. There is a W pattern. In fact, I would say this down here too. You know, there is. There's like this. You've got basically too an inverted head and shoulders pattern, but you can make out of that there are W type patterns. There's no question about it. Let me show you one. Look at this too. Oh, AP, that was it. He got it right at the end, or she got it. I'm sorry, AP got it. Here we go. This is what we're looking at right there. Cup and handle. The cup and handle pattern right there. And what a lot of traders will look for is the handle portion exceeding the prior high. Now, the extension of this move is a little bit bigger than just the flag pattern itself. Just instead of this move right here, here to here, which is a decent sized move, but like I said, this could be helpful sometimes for longer term traders as well that wanted to take a little bit bigger approach. Now, generally what we're looking at is you take the distance of this move, sorry, from that point to that point, and you take that and you add that to the end of the handle where you're ready to break out. And you can see that would be a bigger move than just the flag itself by maybe, 10 points or so over here. But the point is here is we're not just being satisfied with just a simple flag pattern, which we can do and we can utilize because we have the 3 days up to 7 to 10 days to look at on the chart. We say 3 to 10 days. Okay, we can go shorter term if we want to, but if you find something like this, it might be more interesting because you're thinking, well, it could have a very, very strong move to the upside. One thing we're running into here is that 200. Okay, it's a big round number. We've hit off it a couple of times, and sometimes you're getting some selling at that point. Okay, we're seeing that there. Now, because we're looking at this move up here, some traders, we've already exceeded this point. So some traders would say the pullback here for a flag pattern, we're only looking for this move up. Let me change the color. Sometimes they'll say it's we're only going for this move to the prior high. And by the way, that would have actually worked to a degree. You would have captured, but still it's like a 10-point move. That's what they're looking at. But as this pattern's still developing and it may be part of a larger term pattern, that cup and handle, there could be more to it. And clearly there could be more to it because let's just go ahead and pull our y-axis down. I'm just going to grab this and drag it down. And I'm going to scoot down here into my fibs, my drawing tools, not the percentage, but the one to the right. So I get my extensions in there. I'm going to click on my extensions and I'm just going to see where that 100 takes me. A full 100 retracement. So there's a 100. If I take it down to this level right there, you can see that I think it's just that line just above us. Yeah. So it's actually a little bit above 220. What does that tell us? Well, there could be more move, a greater move here than what we've already had. And so, although we've run up to where some traders will take the flag pattern, which is right there, just to that high, that's all they're looking for, is a little bit. So maybe that's a 3-day move or something. Others would say there could be a little bit more there, and now we're waiting for the possibility of this to occur, or a little bit, a move outside of that range. Okay, so the next thing is what we'll be looking at for further evidence of the possibility of a breakout. Now, did you see that we saw, we had over here, remember this right here? This sideways channel, it identifies specific trend lines right there, which help to identify the slope of the downward move. That's the move coming down. Now, what's even more interesting is when the flag pattern itself does something like this. It's almost more of a pennant type pattern, and it's more sideways as opposed to downward sloping. This trend line that we have up here, this red trend line coming down off the top, is kind of like this trend line right here. It's a break above resistance. Now, that could be a very important level to look at. That's like a 200. That was at the 200 in terms of points. So there's the possibility of a breakout. But remember, this is still sitting at the end of a larger term move that might have an extended move to the upside, a larger cup and handle that is just barely started to move really within its potential greater run. So let me just draw this out so I can kind of illustrate this. What if you say we're hitting 200? What if we come down here again and we do it again? One thing that traders will look at is you've got this resistance level up here. The move itself, as you come up, and we've drawn off the top here. What is happening here? Watch this. Hit it again. Hit it again. What's happening with our lows is the trend, at least a portion of it, getting those higher lows in here. Take a look up top. Okay, that can be construed as a form of strength that some traders will look at. That is a higher low than here. Are we getting up there? That was a pretty sharp move. We actually got a higher high here too. But if we come back down here, that could still be another higher low. And watch these carefully when you're looking at resistance. A lot of times you're going to get that trajectory coming up where you're just going to see just a sequence of higher lows. You might still be keeping resistance, but my point is if you get the higher lows, what traders will look at, and then you get a breakout right there that actually closes, not trades above. We don't want any more of this kind of nonsense where it's just giving us these shooting star type patterns, but actually closes above that 200 or closes above a range that we hadn't seen on the bodies of this candle. That would be construed, I'd say, from a lot of traders as showing more evidence of support on top of everything else that we just looked at. Do we have that yet? We don't, but this is one that we could look at for this class clearly and utilize going forward. So where might I put those resistance points at? Resistance. Well, a couple of different levels. First of all, I could put the prior high just above 200. I could right click. I could create just an alert there so that I get notified if I break above that level. Right? So if it breaks above that level, there's a line there just so you could see it. But that would be an interesting notification. Additionally, what about a pullback here? A pullback and then a K hold, kind of like we had like right in there. If it's a higher low, so this is kind of the sequence. I know we're breaking down into a lot of different categories, but we're going to be tapping into these as well. It's kind of intricate, but we're trying to tie in the trend to larger patterns as well. But let's just say this. We get a pullback here. And what do we get on that pullback? We get a higher low. But how do we know it's a higher low? We don't know until it breaks out. But what could be additional evidence of that higher low? How about a K hold on a higher low? You got that here, and you tested that level, right? And so if you come down there and you get one here, let me just draw it out. Like if you get right there, let's just say you come down to that bar and the next bar breaks higher, it's not to say that we just have to, wait for a resistance level break. We could still wait for a K hold. Now we don't have a K hold yet. So that is technically saying a close above the high to low day, which we don't have. But I'm just illustrating this for the future. Somebody that's looking to get to an early entry, they could do something like that because they're saying, I like all the evidence I've got. And now there's the possibility the K hold that could take us on up there with the formation of a higher low. Because that in and of itself, that higher low, you're getting closer and closer, you're inching to it. So it's almost like the power, the strength of it is being developed as you're reaching up to that level. Okay. But right now on that pullback, we might come down for a couple of days. Do we have a K hold yet? As I mentioned, we do not, right? It has not come down yet. We don't know where it will come down, but generally speaking, folks, that is a flag pattern with some strength. With a cup and handle, no guarantees it'll follow through, but we did actually take out that high as well. And sideways, a sideways kind of a flag, the flag portion of the move. And those are generally, I'll put a bigger plus in here, stronger. Yeah, we'll see if that does work out. But I've got a little alert in there, and I'm going to watch this very carefully for the possibility of a K hold coming in here too. And if you had a watch list and we had a K hold column, you could find out. Of course, you might have a small number of companies in a small number of stocks that you'd be looking at that would actually fit this scenario. This is a scenario that's quite intricate, right? As you're kind of focusing in on this, folks. So I'm going to pause for just a second and ask any questions on this. We hit a lot of details, but we're going to be tapping into this, going forward. And the reason why we're putting so much effort into this is we're just trying to see what of everything we can get on our side, because it is such a short move that we're after, and we're just trying to isolate that. But it's also coming within maybe some of the stronger areas too. Let's move on to a different stock that we can actually kind of look at here too. This is Keysight, and you'll notice some similarities here. By the way, a couple of things that stand out to me here too. That's a pretty big gap. It's kind of hard to miss. Now, if I was sitting in the back of the room, and although I'm actually a bit nearsighted, I would still see these gaps. They are not necessarily small. You can see them on the chart. Obviously, this one's a bit bigger. But these are earnings gaps. This company beat earnings. Now, let me just double check this one. I looked at some prior ones, but let's just look at over here. Okay, click. You can look at this. So 165 versus 141. That can move prices higher, and that can be a positive, big picture for stocks going higher, because maybe the value of the company's going up as well. It might attract big institutions, big institutional money. And if you guys know a lot of these things I've looked at, if you've been to some of my other classes, ThinkScript and whatnot, I do look a lot at this money flow. Now, do you see any volume maybe coming in here? This tries to net out buyers versus sellers. Well, just something to look at. You might have some indicators, right? So you got a big gap. And before I go any further, let me just draw one last thing and we'll go right into our flag pattern right there. That was resistance. Now, we took it out a little bit over here. We dipped all the way back down, but the gap over there, waiting to get past earnings, was there. Another key thing within this class is we've got to be very, very careful about earnings. If we don't have a really good sense of earnings, the risk that we're taking on could be too big relative to the potential reward. Okay, case in point being, look at this flag pattern here. There's your flag. There's a pullback, and you're just starting to make a higher high right there. We'll see if that unfolds or not. It's basically coming off a similar low. You did get a K hold in there, but if there was an earnings report here, and we're looking for a move that is equivalent to maybe this price move here, there's a set amount of potential reward we're trying to get out at. But if earnings come in negative, and it gaps down here, what did that do to that potential risk, potential reward, the RR, risk reward ratio? We shot ourselves in the foot around earnings. You have to be very, very careful with that. You have to have some really strong conviction about what's going to happen. By the way, this had a couple of positive gaps to the upside, which helped to reassert the upward trend, but also it formed off a couple of negative gaps to the downside, both earnings related right here, right? Okay. Alrighty. So let's do this. Let's break this down a little bit and see what we've got. So here is our pullback. We didn't break any lower. In fact, we held this gap, which oftentimes is a key level of support. And I mentioned to you, there's a lot of support prior highs. It was prior resistance, and the corollary to that resistance is support. So now we're above it. Yeah, we're saying there could be some support there, and we're seeing that. We just broke above some highs right now. Okay, so here is kind of the general setup. There is your close above the high of the low day right there on this pullback. It's not the first one. The first one occurred right there. Now, is that going to be an entry point? It could be. The K hold itself. I have a column over here that I look at, which is a K. Well, we have a K hold column. Close above the high to low day column, if you get that. It would have shown up on these days. That was a low right there and a low right there. Now, one of the things that can be really, really helpful here is looking for that second day follow through. Are you giving up a little bit of move to the upside? You are. You're giving up a little bit. Okay. This move right there. You're taking out, that's a 1 day rally off that move. Why would it be important? I mean, if you think about it, if you have a 2 day move, you're having 2 days that go exactly in the direction that you anticipate. You're giving up some movement here, but maybe not too much. Just a little bit. You want to see a little bit of a follow through. Did we have 2 days up? Yes. We had some interesting candles come in here, though. Right? And you can see that, I mean, that was kind of a bit of a shooting star, but we did close higher. A lot of times you just like to see a green candle. That's, signifies opening lower, closing higher, coming up again, because what you're wanting to see is what got you there in the first place. These kinds of moves, like right over here. Look at the strength right at the beginning. Okay. You saw some of that actually even on this little bump over there, which did take us to our high point. You had a follow through. There's a little bit of a pause in there, but this is what we can be looking at. So it comes down to where we are right now. Now, I'm going to revert back because, like I said, it's a little bit tricky to always find an entry signal exactly, but I can at least show you where they could be. And I'm going to put this on so we can keep tabs on it and we'll watch it. But where might an entry be based upon what we just looked at? Any thoughts on that? We talked about it a little bit earlier. Just digging in a little bit, I want to see where you guys are at on this. Where could that entry price be? We did make a new high. We bounced off. That's still a flag pattern off of a lot of strength over here too. Good earnings as well. Perceived good earnings by the market, right? You beat earnings expectations and prices are going higher. So where is the potential entry? Any thoughts on that? Oh, yes, we are getting it. I did see the test posted there. Oh, Cam's got us covered on a few things too. Let's go back to this. See these lines right here coming through? Now, I don't know if this was drawn in here perfectly. There's a couple of different ways to draw it, but let's go back and I'll highlight it. So we can draw off the bodies of the candle or off the actual wicks of the candle. And I've got to get the right drawing tool in here first of all. So let's go to our drawings right here and let's just point it out. So that's the high right there off that move. And I think technically we had just a slight low here. So I'm fine carrying the trend line on over there. I would have said actually before today, we would have had maybe a downward sloping move right here. But did we close above that? We did not close above it yet. It's still kind of, showing us a few things, but this is a way to get in a little bit early. If we hadn't already added here, you can add on that K hold. You can wait for a couple day confirmation. If we were going to say we're going to buy in here 100 shares in total, well, maybe the K hold. Let's do this. Let's just say the K hold, that's our total. At the confirmation of the K hold, where we actually close above the high to low day, in other words, it was this bar here, we say we're going to add 50 of those 100, 50 of the 100 shares, okay? When we take out this trend line, as shown in our slides, that's when we're going to put in the other 50, and so it's going to be 100 out of 100 shares. Okay, we've added in that portion. We start off here small, and then we add in 100 here as well. Okay. All right, now we want to talk about risk and reward on this, but I'm going to show you here. Now, you guys have access to this. I don't know if I do. I should still have it in my demo account. I think I do. I don't know if you knew this, but you can get an alert right off here as well. Right click on your trend line, create alert withdrawing. That's right. You can get it, and it's got to be a cross above. The default's cross below. So go ahead and put in cross above, and then just say something like this. Trend line break, something like that, right? It's breaking above that level. That could be one area to potentially look at. Because that's signifying that this downward sloping trend, which is very, very small relative to the longer term trend, but it identifies this trend coming down, is starting to change. Now, will it continue to change? That remains to be seen. But if you can break that, that could be a further indication. So I've put that in right there, and I will add, I will put in a trade on this this breakout right here, a close above that level if we get it. Now, if I'm seeing some real strength, and let's say there's news coming in, If there's news coming in, maybe I add to it too, you know? All right, folks, if you, real quick note, if you find this helpful, useful, and by the way, the other classes we're going to be doing are just going to be jumping right into the trades, and we're going to be hitting, maybe some specific notes that we'll pull up in a box over here, and we're going to make sure we got those listed as we track these out week in and week out. And we have a short time frame to do it. So from one week to the next, we'll be doing it. But yeah, if this is something you like, find useful, folks, definitely smash that like button and be sure to subscribe. Really easy to do, bottom right hand corner of the screen. Love to have you on board if you're not already within our group. But with that, let's do this. I wanted to back out and show you where we could be looking at here at a potential entry point. And again, we're just looking for the follow through here of a move to the upside here, okay? Now, what I'm gonna do, because I did wanna show it anyway, so I'm gonna put the trade on and I'll get out of it, but I'm just gonna go through the process of putting it on right now just so you can see it. And then we'll just track it. But that's actually going to be the signal right there. I want to put one, at least have one under our belt to take a look at as we go through this. Where is the potential exit going to be, or the stop level that we talked about earlier? It's going to be just a tick below this bar. You say, gosh, Mike, that's so tight. It is. It's really, really tight. But remember, we're dealing with a set frame of a potential reward to the upside. So our potential exit would be just a tick below there. I could even move it below this bar, but I mean, maybe a tick or a dime or whatever it is, a quarter below this level, because the expectation is exactly what we thought it should be, which is this is a flag pattern. It's breaking up here. That's what the history of this stock has done as it's moved up higher. Okay. So let's just go ahead and take a look at the trade tab. Now what we're going to be doing too next week is I want to take a look specifically at options. I'm going to put an option on next to the price so we can monitor time decay as well as we go through this. But while we have this up, let's go ahead and just add this in. There is a little bit of time left in the market, and you can see there is a little bit of a spread on this. It does trade about 500,000 shares plus a day. It's actually a bit higher than that, but I'll go ahead and just add in 100 shares just to get one under our belt, and you guys know exactly where that potential exit's going to be. Okay, there we go. We've added that to our portfolio. I'll have that set up here. Now, before I'm done, let's look at another one showing that strength in a group like this. Now, coming off the bottom here. Okay, here is Unity Software. Now, not having a great day today. You're going to see from maybe some of the indicators we got down here below, there's been some money flow indications really shooting this thing up quite high. In fact, money flow, looking at it, if we just use money flow by itself, see this high on money flow? It tells us, according to money flow, do you see how we broke above that level? We're above that level, which tells us that prices could go above a high like that. And so there could be some potential, according to some of the indicators, that prices are going higher. That's one I wanted to look at, just to throw that out to you to keep an eye on. A couple that had downgrades, and we'll wrap it up here. Here is Tesla. Bull flag pattern coming down. Folks, it was a downgrade. Be careful about that. We had a close above the high to low day, but there was a news event that occurred. You got earnings coming out too. Another one that came out that had a downgrade today was Apple. See the pullback right there on Apple? There's your pullback. There might be support down here, but it had a downgrade as well. Are we seeing any signs yet? There was a close above the high to low day, but it dipped. We didn't get a 2-day follow through there. Okay, so I've thrown a lot out to you, but we had to do this on our new class introduction because we're going to be diving into this, and I'll use this as a reference to refer people back to. Again, folks, give us a follow on X. Cameron May CS, Mike Fairborn CS. It's great to have you all here today. Thank you, Cam, very much for your help in the chat. Folks, like today's presentation, it does really help out in terms of getting this sort of content out. I'd really appreciate it if you're able to do that. If you did like it, you got to like it. But gotta like it first. And then finally, yeah, be sure to subscribe on that, everybody. I look forward to future discussions with you and any sort of additional requests. All right, see you.